Hello friends, we'll be discussing journal entries which are related to separate set of books being maintained, or rather when no separate set of books are being maintained and the co-venture records their own transactions. The journal entries related to that will be discussed here further. Now, when we understand that no separate set of books are being maintained and the co-ventures record only their own transaction, this happens when they feel that it is wasteful for them to keep the record of all the transactions. So what they do is that they just record their own transactions, rather the goods that are supplied, the receipts that is done, the payments that are made, everything related to only them is recorded in their books of accounts. Now, what happens during such scenario is what we'll be discussing, and what are the journal entries that are supposed to be passed is what we'll be discussing here further. So let us write down certain details about this scenario and then understand the journal entries, which will be better for you to understand when it comes with a situation specific. So let's start with that. So I've mentioned the situation where we come from. Now, when it comes to every co-venture recording only his transaction, that what happens is something what we have mentioned. Sometimes they consider it to be wasteful, rather it is time consuming for them, hence the co-ventures record only their transactions. For this purpose itself, a joint venture with co-venturer account is prepared. Now, all the expenses incurred, all the materials sent, all the goods sent, all the profit or loss, or rather all the profit is debited to this account. So, expenses incurred, material sent, profit earned is debited to this account, and loss is credited to this account. That means the joint account with venture account, along with any receipts from venture or from co-venture. So if there is loss or any receipts from venture or co-venture, then it is credited to this specific account. However, the determining or the determination of profit or loss cannot be done in this specific account. That means joint venture with co-ventures account, it cannot determine the profit. So to determine that, we have another account that is known as memorandum joint venture account, which is prepared especially when the co-ventures are recording only their transactions. Now it contains cost of goods, expenses incurred. On the debit side, that means on the debit side of memorandum account, you'll have cost of goods, expenses incurred, and on the credit side, you'll have closing stock and sales to it. So now that we know what exactly we are supposed to prepare, let's figure out what are the journal entries that we'll have to pass here. So let's go on to that part. So the first entry that we are planning to prepare is supply of material from the store. So from stores, material is being supplied to the joint venture. Then what is the entry that will be passed here? Make sure there are two accounts that are prepared. Joint account, or rather joint venture with the co-venture account. Joint venture with co-venture account is one. Second one will be memorandum joint account or memorandum joint venture account. So the entry that we have passed here is joint venture with XYZ. That means anybody can be the co-venturer. So joint venture with XYZ account debit to purchases, because this is a purchase that is done from the store and it has been sent to the joint venture. Now the next scenario is where the payment of expenses is done. That means again similar kind of entry is what we'll have to pass. Let's figure out what entry is that we are going to pass here. So the entry that will be passed here is joint venture with XYZ account debit to bank or cash, whichever the mode of payment is. Now the next scenario is when there is a sale on venture. That means sale happens, then what is the entry that we have to pass here? So the entry that will be passed here is, as it is a sale, it will be credited to joint venture with XYZ account and bank account will be debited. So the entry will be bank account debit to joint venture with XYZ account. The next scenario will be if there is a profit on venture, then what is the entry that will be passed? So when it comes to profit on venture, again, as we know that we have already discussed, profit will be debited and loss will be credited to this account. So profit on venture account, or rather when we can talk about profit, joint venture with XYZ account debit to profit and loss account is the entry. Now the next scenario will be loss on venture. In such a scenario, it will be the reverse entry that we passed in profit and loss account. So the entry will be profit and loss account debit to joint venture with XYZ account. Now the next scenario will be final payment to co-venturer. Then what needs to be done in that? So in that scenario, whenever the final payment is supposed to be done, joint venture with XYZ account will be debited and bank account will be credited there. On the other hand, the next scenario will be if the final payment is supposed to be received from a co-venturer. So in that scenario, the entry will be bank account debit to joint venture with XYZ Limited. So that is the journal entry that you're supposed to pass. Now let's understand few more details on this. So we mentioned certain steps here while we are understanding the bookkeeping system of joint venture. So the step one is co-venture will mention their own transactions. Step two is, now once their own transactions are recorded, none of the co-ventures will have idea about their other transaction. That means other co-venture transactions. Hence, these details are shared through a common account which is known as memorandum joint venture account. Step 3 will be joint venture profit share. That means the profit sharing will happen between the partners, or rather the co-venturers. And the last fourth step will be reconciliation of joint venture control accounts. Now I understand this will be a little bouncer for you. The reason because these are different terminologies that are being used here. But once we go through the illustration, you will be able to understand what exactly we were talking about. The only basic concept that you have to understand are the journal entries, the way they are passed. Once we start with the illustrations, we'll understand how exactly these accounts are being prepared. So I hope these journal entries were clear enough to make you understand what exactly we're expecting when it comes to memorandum joint venture account being prepared. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.